What is up, guys? Matt here, Flex Trades. Hope everybody had a great Monday, day one of the brand new trading year. Hope everybody had a good one. Right off the bat, pre-market, we had Tesla gapping up 100 points or whatever it was. So the market got off to a hot start before the market even opened today, and very fitting to the month of January. Especially if you think back to last year, January, February was just pure craziness. So there was subtle vibes of that this morning, which was interesting. Like I've said in the past, at this point, expect the unexpected when it comes to the market and what we're dealing with. It's, the new normal of things, right? For those that have been trading since before pre-pandemic, before COVID started. So that would have been March of 2020, almost 2 years ago. That's crazy. Jesus, time flies. But for those of you who traded before that, you think back and it's like months like we had even this past October, or months like we had back in February or January of 2021. Or November of 2020 or March of 2020, right? Those were all pretty much firsts, especially, someone from me, like me, who's traded about 9 years now. That was very, very much, the first for a lot. I know back in during the tech bubble back in the late 90s, we could, some people could make an argument that the market was just as crazy or crazier back then. I think personally, although I wasn't trading back then, obviously, I think it's kind of hard to compare. It's like comparing apples to oranges, right? We didn't have high speed internet. We didn't have mobile phones, etc. Anyways, I'm going off on a tangent. Where I was going with this was that on a morning like this morning, with the action that we saw and the quick vibe check was like, oh, we're right back into things. We're right back in the heat of the market and things are going crazy. Expect the unexpected. That's going to be kind of the theme for at least the early part of the year. Broad market, which I'll go over in a moment. Broad market looks good. Small caps, constructive. And a lot of individual industries and sectors look potentially ripe for some movement early on in the year. So we'll just, play things by ear, take it day to day, take it week to week. But with that being said, it was definitely an interesting start to the year, to say the least. Without further ado, and for those who are new to the videos, for those who aren't accustomed to how I do things around here, I always start off with broad market. I always like to start off with the SPY, with QQQ, broad market tech, and just do a little breakdown of these charts. And for those that have watched the videos over the last week, I've been talking about this general type of flag movement developing. But I'll backtrack about a week or so. So we had that December chop, which I'll outline here. And then we found a bottom and we pretty much went straight vertical after that chop. And now we're in kind of that high and tight type of flag look. Same thing with tech, right? Had that chop back in December, found our footing, went straight vertical over the course of a week or so. And now we're kind of in that flag, that pennant type of look. Things look constructive. If you go back a year, if you go back 2 years, really since the lows from March of 2020, not much has changed in the general direction of uptrend, right? It's pretty much been the same, constructive and in an uptrend. So with that being said, the macro trend still uptrend, overall bullish feel. What I've been saying the last several days, and what I'm going to continue to say, is that SPY will continue to be constructive. I think this could pull back down even as low as mid 460s, even potentially low 460s. I mean, if this gets a 50 SMA test within the next couple weeks, it wouldn't surprise me. And in fact, I'm always in the boat where I welcome these pullbacks, because with pullbacks come opportunity. So I invite them. But if we don't come down to there, I still very much think a general trend like this is very healthy. It's very constructive. And on the other side of that is a breakout. And the same type of deal applies with broad tech. This could pull back, 50 SMA, maybe even wash below it. And I still think it's constructive and set up. And I'm going to go into some individual names here in a moment, and you'll see exactly what I'm talking about with a little more detail. But broad market looks good. Nothing to trip out over. Not much more to update on. We're in that high and tight. Let's just continue to watch that trend build on itself. Tesla, like I was saying, really kind of the main one today. And it just kick started my year, and probably for a lot of people too. A little disappointed because I was intending to build this position, and I very much thought I'd have at least 1 or 2 more days to build into that position. And then this thing obviously just gapped up and ran from that gap up. Unfortunate that I couldn't get that max size position, but everything that I've talked about over the last week, I went over this a week ago after the strong move. I said, let's be patient. I drew out pretty much exactly the flag that ended up taking place. So, it was well forecasted. It was well documented. And I started talking about it last week, and I mentioned a few times that I'm going to scale in. I'm going to use down here toward, 1030, 1020, somewhere down here as my risk. And I'm going to build in to washouts. And obviously this morning's gap up kind of put a wrench in my overall plan. But I still had a little bit of size. I still had a little bit of a position. I'd say I had about probably 25 or 30% of what I was trying to build up to. So again, kind of unfortunate, but that's just trading, right, guys? That's just the market. Rarely do things play out exactly perfectly as we would like them to. In a perfect world, I would have had that max size Friday last week, and I could have had an even better morning than I had this morning. But we don't deal with coulda, woulda, shouldas around here. I tell you guys that all the time. If you start having that mentality of, dang, I could have had this, or I could have did that, it's just toxic. It's just a waste of time. So I'm sitting here saying that, but I'm really not at the same time, because it's crap. It's a load of crap. Don't think about it. Think about how you did execute it on, and take the constructive, I guess, the good and the bad of what you did. And then next time do it better, hopefully. But again, sometimes you just get unlucky. Anyways, so obviously strong close, high of the day, hammer candle. Ideally, this doesn't just, blast straight through all-time highs up there at 1250. Ideally, we can get a little follow through tomorrow. And then ideally, again, I'm going to use that word a lot tonight, which I use a lot in general, because ideally this can digest a few days. Gives us another entry point, right? Something like this, right? Where it just kind of carves out a high and tight look, a little bit of digestion. I think this gap here, I think filling this gap is a little too obvious in the short term, but we'll see. But in general, I want to see this type of look, tag all-time highs and then pull back and then sideways a little bit, and start building a position there for the potential of a breakout, blow off breakout. So playing it by ear, but just overall great forecast. And although the size wasn't what I would have otherwise wanted it to be, otherwise great execution. AMD, not too much more to update on here. The line in the sand is still the same up here around that 157, 158 mark. That high from a week ago, that's the line in the sand. And then above that is going to be that all-time high breakout spot up there around 165. My risk remains the same down here around 142, 140, something like that. Down in the 140s, the low 140s, that's where my risk is going to be. And, I'm just kind of patient as this continues to kind of coil up in on itself, right? You can kind of see it happening already. This is what I've been alluding to for several weeks now. This is what I've been forecasting for several weeks now. I think the first time I started talking about this one again was back here off of this low. And since then it's put in higher lows, and now you can really start to see this coil coming together. And really, NVIDIA is pretty much the same exact chart, which isn't all too surprising considering they're very similar companies. But there you go. There's line in the sand on NVIDIA right around 315. And then above 315, you got that 335 mark as the next spot to watch. But same thing here. I'm building that intrinsic, that in the money, close to intrinsic value, that core position. And my risk is down toward that 50 SMA, maybe right below the 50 SMA, toward that 290 mark. Facebook thoughts pretty much the same here. Line in the sand, which I drew last week, up toward that 355 spot, building that intrinsic in the money, that core position, and using down here at that 330 spot on the common stock. That would be where I sell for a loss. If we trip through that, that's where I would take my loss. Because in other words, that's my risk down toward that 330 spot. But this continues to develop, and this is, generally speaking, this is kind of what I'm looking for the shape to develop into over the next several days, if not weeks, before getting back up toward that 355 spot. The 355 spot is the big spot to watch. BABA, talked about this one briefly last night. I mentioned it again today. Nice close off that 115 spot. Again, line in the sand, the spot to watch is going to be that previous high right there around 125. If we can clear up through 125 and we've got a shot of volume to support it, I don't see why this can't get up toward the mid 130s. So again, this is one of those types of deals where I've got a risk in mind, my risk personally, down toward this recent low, right around 110, multi-year low. And really, my gut says that we're carving out a multi-year bottom here, and this has the potential to be a swing trade over the next month or so, maybe even longer. It's a little too early to say that with full confidence, but as it comes together, I'll continue to update and continue to update my risk or anything like that. But it's coming together. That recent high, that's the spot to watch. Again, position, that core position in the money, intrinsic value. Amazon, I threw this up here. I'm not super pressed on getting a position right away, but that recent high around 34.50 is definitely worth watching. I mean, you can see this kind of condensing in on itself, right here, right? You see this look here. It's kind of that falling wedge type of look. So if we can have a few more days where we get even tighter, this is definitely getting to an interesting spot. So I'm keeping a close eye on this. And if this does break up through 34.50, I'm definitely inclined to take a position, probably more of like an intraday scalp type of position. And if I end up buying it, it would be, again, one of those core in the money positions, and my risk is going to be down toward this $3,300 mark. But again, everything I've mentioned up until this point, I do like better. This is definitely something that I'm keeping close tabs on, though. And then SNOW, same thing I've been talking about, right? That multi-month coil, higher, lower highs, higher lows. You can see it just kind of like closing in on itself. Same type of deal. My risk on this is going to be to today's lows. So about 320 is my risk. Now we got a couple small cap, micro cap here. AVCT broke up through that recent high today. Obviously not an ideal close. Still monitoring this closely. I'm still building a position here, and my risk is still into the low $2 mark. Let's just call it Friday's low, right around 220, 210, something like that. So that's, always you when it comes to small caps and micro caps, you always want to risk in mind in general, but when it comes to these small cap, micro caps, you want to be especially respectful of your stops, because they can turn to crap real quick. But that $3 mark is definitely an interesting spot to watch, especially if this has volume, right? And then last but not least, this OWUV, excuse me, this is a OTC stock. Really, I'm patient for down here toward 20 cents. I would love a wash below 20 cents. I would love a wash down toward this 50 SMA. Those are kind of the first two spots I'm looking to scale into this trade for a potential bounce trade, right? So we got a nice washout, and then a potential for a nice bounce trade. I didn't mean to draw that bounce arrow so high, because I don't think it's going to necessarily bounce that high. But if we can get something like this, that would be a solid trade. Wash this to 20 cents, 18 cents, 15 cents, build into that with a risk down toward 13, 12 cents, and then bounce toward 25, 30 cents. I've seen it countless times with OTCs, where they have a huge blow off and then a huge pullback. And then a nice dead cat bounce following that. So from the highs, 65 cents, 20 cents would be a 70% pullback. 15 cents would be a 76% pullback. That's a nice size pullback. So keeping tabs on it. I'm going to scale in slowly. I'm not going to oversize. I'm not going to get too excited. But it's definitely something worth monitoring. All right, guys, that's it. That's the watch list. That's the game plan. This is what I do generally every night of the week. Anytime I have some stuff to go over or new theses to update you guys on. So thanks for tuning in. I hope everybody has a great Tuesday. Respect your risk as always. I'm out, guys. Peace.